G'day traders, Stacey Burke from Stacey Burke Trading. A short, quick video today talking about the weekly template. So I use the daily charts for levels day to day, but also the overall high and low of the month, the high and low of the week, the high and low of the day. Now just a quick review, again the timings, I'm looking for setups at the session open. So the highest probability setups obviously might be shorting a market that's moved up high in a downward broken market, or a market that has gone up 3 days in a row, possibly in a downward market, or a market that has gone up 3 levels in one day for a strong downward correction, and the same thing applies in the upward move. But coming back just to review our simple process, my simple process, I'm looking specifically at these timing windows. Asia 8 to 11 p.m. New York Eastern Standard Time, London 2 to 5 a.m., and New York 8 to 11 a.m. Now, there are times when the market will go outside of these times to the higher low of the day or the week. We'll get a bit more into that in some of the coming videos, the gap times, and specifically because many of these algorithms, these markets, NASDAQ gold in particular, and the major pairs, if we're at the higher low of the week, will push out during that 3-hour window. And that comes back to understanding how the 3-hour window has set up in each one of these sessions. So we'll talk a bit more about that in the coming few videos. But again, high or low of the day, high, low of the month, high, low of the week and the day. And then understanding I'm not blindly getting in the high or the low. I'm looking for the levels to be retested or locked in before I enter the market. Double zeros and 50s, engulfments, pin hammers, and then we talked about time compression. But just to get a bit more specific now, if we come back and look at any week, we're either working down day 1, day 2, day 3, 3 pushes into the low, they make a low, goes down day 1, day 2, consolidation, 1 push, 2 push, 3 pushes, 3 pushes down to the low, it goes outside of the low of the week's range, before giving us a reversal explosion at the New York Open. So not the U.S. session open, but the New York market open. Again, this is a little bull candle on this is the 15-minute, but on the 1 minute, this gave a great reversal trade for an explosive move up. These are the trades, again, that keep you out of the chop on the inside. So you're either trading down at the lower high of the day, okay, but the weekly template proceeded to work the low of the week first. Consolidation on the inside, went up to the lower high. Okay, vertical move on CPI all the way down for an explosive move back to the high of the week. Now again, there's traders who were looking to short this at the high of the week in the northern hemisphere. A little bit later for me, but they're shorting this up at the high of the week. One push, 2 push, 3 pushes. There's our micro M structure. This is a 15-minute. Okay, the reversal happens. Falls all the way back down into the next low of the day. So again, we have a high of the week, low of the week, heading into Friday. The market proceeds to auction and fall all the way back down into the new week, into the Monday, taking out Friday's low. Doesn't matter what market you use. The yen, looking at last week on the yen. Monday, day 1. Day 2 takes out Monday's high. Okay? Day 2. Day 3 pushes into the high before dropping down and breaking structure and heading all the way into the low of the week, pulling back inside on Friday. So they went down to the low of Friday on Monday, broke the high of the day, creeper down into the Asian session, an explosive move back to the high of the week, back up into the high of the week again, before falling down, breaking structure in the U.S. session, consolidating, continuing that move down in Asia, into London, into the low of the week. So it's about keeping things simple, and not every week is every pair going to offer a great trade. So again, if we look 1 push, 2 push, 3 pushes into the high of the week, this may be the best trade that the yen offered for the week. Now again, we're looking at this on the 15-minute chart, but when we're up high like this, and I gave this example yesterday, okay, we're looking for trap volume up high. We want to know that the market's going to consolidate, trap volume and drop away, or if it's a long trade, we talked about this vertical candle. That space is a free fall once it gets in there. So up here, we're looking at a bear pin. There was news on the day. This market pinned up to 75 before closing at 65. So we want to get filled between 50 and 75, obviously. If you're not selling up high, if you can get in on the 15-minute. But assumably this market is going to offer a minimum of a retest back to where the original pump and dump began. If you weren't comfortable holding this overnight, you could have been exiting anywhere outwards down sort of in that 25 to 50 pip range, depending on how far that market moved in that hour. Or if you were holding that now with the thesis that this could return back to the low of the week, low of the previous day is our first target, or you're out and your bias the next day is to continue that move down in Asia, London, and possibly New York. So again, day one. Day two takes out the high of day one. Day three stays up high. We have a peak formation. One push through the high of the day. One push. Two pushes. 1, 2, 3 on news. Break in structure in the short trade at the beginning of the U.S. session. And just real quick on the NASDAQ. So I'm going to just emphasize again, these people who are talking about hindsight and predictability, I'm going to tell you what, the same thing's going to happen this week. There's going to be a template. We're going to have trap volume. We're going to have a 3-day setup. We might have one day that offers a huge 3-session setup. So get your process down. Don't be sitting there looking at it the next day and say, oh, that's great in hindsight. Master your process so that you're actually in the trade and not critiquing those who actually take the money away from the people who don't know what they're doing. So once you figure out what you're doing, you can go to the screen each day with confidence, not guessing or hoping. You can wait with confidence, recognizing the opportunity if it presents, and then knowing how you're going to execute that in live time, whether it's a trade that you want to put size on or you just want to position yourself to scalp out of that move with the 25, 50, whatever it offers, or if it's a large high of the week, low of the week, high of the day, low of the day opportunity that could be a measured move for a range expansion of a high to low of the day for maybe 150 to 300 pips, which on NASDAQ and gold is a very real possibility at least once or twice a week. So just again, looking at the NASDAQ, we can look at the last 2 weeks. We have the low of the week from on the Friday. Again, our high of the week is up top. Okay, but you'll notice we have all this lower highs from the 3 days heading in Thursday, Friday, Monday. Look at all that volume. So again, just draw a little trend line on those lower highs. Okay, that's a dead giveaway. We might be in a reversal opportunity. Monday is the most common day to see them flip the book. Okay, in this particular case, it was a Monday, Tuesday, inside day on Monday. Creeping trend into the low of Friday, which if we blow this up, okay, here's our Friday. That sure looks like a W to me. Doesn't look like an M when we're down low. So again, I'm going to just step back and recommend the people who are focused on hindsight to start recognizing these situations. Okay, the market puts a low in place. They break it, hit the previous day's low, pull back, retest it into the low, form a W. But you'll see that this level seems to coincide with where Monday's inside day low is, inside of the low of the week. Creeping trend down, same thing, creeping trend. Sitting ducks for an explosive move up. The move started on Monday night. Okay, so this vertical candle down starts the move. Dump all day long. Build order flow. Lock in the low. They take out the previous day's low. That low is our level. That is our level heading into the U.S. session. Okay, I'm going to go to a 1 minute. Does it mean I'm going to get in right down here? No, but I'm looking for them to possibly give me an entry or lock in the low. And then I might be getting in somewhere around the break of Monday's low or on a squeeze on the 1 minute. I might be 15 minutes in. But I'm getting in somewhere down low because my thesis is that this is going to retest here at a minimum. And if it's a really good move because it's Tuesday and this could be the low of the week, I might be in a measured move. And if it moves strong and hard, I'm going to leave a trailer in to ride it out. Take as much off the table as I can. We follow that up. Monday, Tuesday, Wednesday, high. Thursday, break structure. We're in there all day long. We just saw the same setup this week on Friday. Thursday, Friday, same trade setup. Okay, there's our high of the week. Okay, they form a high of the day, drop it down to the low of the day, and then go right back up. At what time? Guess. Take a guess what time this is. The beginning of the US 12 candle window. bang, all the way down. Where does it stop? At the previous day's low. Explodes back up and gets the guy that was short before dropping down and falling into the low for the rest of the session. So coming back and just taking our look, Monday, Tuesday, Wednesday, Thursday, dropping down, Friday pulling back to the high of the day, pulls back to the high of the day. Guess what time that is? So again, I'm going to really just hit it hard. These pins to the high is the New York session at 9:30. They went up right off the bat and hit the stops. And you'll notice that this level coincides with the break of Thursday's low. Okay, so our target, and this was a 50 level, I believe. Again, on not all the chart numbers are going to match up. But this low, there was a zone in here, a strike zone, and they went up to the high, and on the New York Open, they exploded up, came down, went back up 1, 2, 3, locked it in with a 3-bar reversal on the 1 minute, and it fell into the rest of into the close of Friday, all the way at the end. So again, you just look back. Monday, talked about trap volume at the low of the week. Okay, weekly template, get your bias in place, let the market set up. If you're not sure, don't trade. Okay, if you're in this move short, take money off the table. Consolidation, okay, some people have noticed that this is specific to timing. Guess what? This market reverses 1 hour prior to the US 12 candle window. Comes back inside, takes out the high of the day, forms a higher high, comes back and gets the guy that's long before pulling back. Okay, so it pulls back outside of Friday's low. So guess what they've done? They've locked in the low, and they're not letting these guys out. My bias is to the upside the next day. Why? Because they're not letting people out who are short and caught at the low of the week. They go back up. Day 1, day 2. Day 2 puts a new high in. Okay? Day 3 goes even higher. Day 1, day 2, day 3. But what do they do on day 3? They break structure. This is the Fed on Wednesday night. They take out the low. They make a lower low, come back up into the high of the week before breaking down. And same trade we saw the previous week. Breaks down on the inside. They've already broken structure. Okay? There's our pump up, pump, vertical move on the inside. There's our low of the day. Okay, London puts a high of the day in place after the breakout. Okay, so we got a breakout. We got an M structure at the high of the day. We got a pullback and a breakout. There's our strike zone. They retest at the beginning of the U.S. session, and it falls all the way down into the low. Weekly template, and again, it's as simple and complicated as you want to make it. Not every single pair, every single week is going to give you a perfect trade. I like NASDAQ and gold because they move a ton. Whatever instrument you're trading, it could be a bullish template. You might be getting some super explosive trades. London, you might be up in the U.S. session to trade the Fed. If you're in Northern Hemisphere, perfect. These trades came in London and New York. And they're going to give us trades, the same trades this week. So, again, look for the traders to get trapped at the beginning of the week, Monday, Tuesday, high and low of the week. And then once you have your boundaries and your thesis, you can have a bias and be looking for a strong type of blow-off move where there's trap volume up high or down low at the timing window. If there's news, I'll often wait. If the news candle itself moves, it may move for 1 full hour. Then that means when the second hour opens, we may have an opportunity for a reversal stop hunt trade. If it's a trending type market, then it could go for 3 hours. We'll get a second bounce entry maybe in that first hour or in the New York Open. So hopefully you got value from today's video, traders. Study the templates. Go back and review your instruments. Look for the opportunities of when there's the market is poised for an explosive, easy trade. Don't trade all the chop on the inside. That's when you're going to sit there for hours on end, get in a trade, boom, be out. Keep it simple. Hopefully you got value from today's video. Again, thanks for a ton of great feedback, and may the markets
Hi
go.
traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, Stay disciplined, and may the markets go with you.